we'd seen a massive drop on treasuries for several days in a row. Massive drop in treasuries. It had came off of a high print price at the beginning of April of 129. It was now trading at 124. It was down $5,000. And all of a sudden, out of nowhere, absolutely out of nowhere, after us calling about parallel shifts for that big sell, we suddenly tell you that the bond is starting to get cheap. The back end is starting to get cheap. You see that? 251 on the 3rd. 251 London time on the 3rd of April. So after a $5,000 drop, we then went on to bottom tick the US Treasury bond market with that tweet. Take a look at the timing of this candle here. This is a 15-minute chart. So this candle finished at 3 o'clock. In other words, that was your buy trade there. And this is where we've got to from that buy trade. We've taken it $2,000 per contract higher from that tweet. So when you think about that ability, after a $5,000 drop in bonds to bottom tick the bond price, you've got to start thinking to yourself, there's something in knowing this stuff. There's got to be something in knowing this stuff. If that's how possible it is, that's what you've got to try and aim for. To know what this means, to figure this out. The cheapness of the back end of the curve, becoming a real money buying opportunity on treasuries at that stage. Taking advantage of that little bit of information gives us the perfect trade. Nowhere else in the entire world of internet gurus was calling that bottom edge at that exact price at exactly that time. We were. And when you look at that as a storyline, you know, we can't take it back, guys. It's on the charts. It's on the charts for you to look at and say, well, that was exactly right. So a classic trade, classic outcome.